You probably had 6 aunties calling you from India asking if you're okay. Your portfolio is red, your WhatsApp groups are melting down, and now these 3 uncles are telling you to sell everything. Don't. If you do just 5 simple things right now, your money will be safer than most people around you. Hello, fellow Arbab. It's time to boss your money. I've lived through the 2008 crash, COVID, and multiple regional scares. And every single time people lose money for the same reason, panic. I've seen it up close for nearly 2 decades working in finance and auditing, and I'm here to make sure you're not next. So, no doom, no drama, 5 things. We'll also discuss something that actually scared me recently. Not the headlines, something closer to home. 2 apps that many of us use every single day went down. They're back up and running now, don't worry, but more on that coming up in just a bit. Let's start here. If you're getting your financial advice or any of your news for that matter from WhatsApp groups and IG reels, you're already losing. I'm not joking. In times like these, misinformation spreads faster than actual information. In the UAE especially, there are strict, clear guidelines, so follow official channels of communication only. UAE authorities, your bank's official channels, your broker's official app notifications, and that's it. Here's the thing about panic. It's contagious and it's profitable. Not profitable for you and me, but for the people selling it to you. Which brings me to something darker. Every single time there's a crisis, regional tension, a market crash, a pandemic, scammers come out of the woodwork. And they are good. They are sophisticated. They are targeting you, the NRI, specifically because they know you have money parked in multiple places and you're probably a little anxious right now. What does this look like? The fake emergency transfer messages pretending to be your bank, WhatsApp forwards claiming your funds are at risk and you need to move them to a safe account, their account, or it could be a fake investment opportunity promising to protect your money in gold, crypto, government-backed schemes, and so on. And last but not least, impersonation of government officials or bank representatives phishing for your personal or banking information. The rule is simple. Nobody legit will ever ask you to move your money urgently over WhatsApp or a phone call. Full stop. If someone is creating urgency, that is the scam. Now here's a simple trick I use. Ask them to send you an official email. Do not provide them with your email ID. If you then receive an email, before clicking anything inside the email, check the domain on the actual email ID, not just the display name. As Warren Buffett once said, never ask a barber if you need a haircut. Be vigilant. Okay, now the money talk. Markets are jittery. You've probably seen your portfolio go red, maybe significantly red. And every instinct in your body is screaming, sell, get out, go to cash. I'm human. I have the same voices screaming the same things. Don't. Now, I'm not a financial advisor, and even if I were, nobody can see the future. Not me, not your uncle, not your bank's research team, not that very confident guy on CNBC. But here's what I can tell you. If history has taught us anything, it's that markets have survived world wars, pandemics, oil shocks, financial crisis, and every flavor of geographical chaos you can think of. And they have recovered every single time. The people who stayed calm and stayed invested or even bought low came out ahead. The people who panicked, sold, and waited for the right time to get back in. Guess what? They mostly just missed the recovery and paid extra for the privilege. As Peter Lynch put it, far more money has been lost by investors preparing for corrections or trying to protect them against corrections than has actually been lost in corrections themselves. So no, you don't do nothing. You do the right things, not the reactive things. Now, all that is the historical view, and I genuinely believe it. But let's say, for argument's sake, some wildly unlikely scenario plays out where something just doesn't recover the way it historically has. That's precisely why we never stop talking about diversification. Not as a panic move, but as the boring, unsexy, absolutely essential foundation that protects you before you ever need it. Here's what this moment should be teaching every single one of us. 2 apps that a lot of us use, ADCB and Sarva, probably a lot of other apps, both had outages recently. Both are back online now, everything is fine, but for a good period, people could not access their money or their portfolios. Now imagine that was your only platform. Imagine that was your only bank. This is exactly why diversification isn't just about asset classes. It's about platforms, geographies, and currencies. My own portfolio, and I go into this in full detail in my portfolio breakdown video, link in the description and in the pinned comments, is spread across UAE-based investments, Indian markets, US markets, emerging markets, developed markets, crypto, gold, physical and ETF, emergency cash reserves, which is liquid, accessible in multiple accounts, and all this is spread in USD, AED, and INR. Not because I'm paranoid, because I'm prepared. I'm not optimizing for maximum returns. I'm optimizing for stable long-term growth. There's a difference. All that said, if you have 200 bucks in savings, it doesn't make sense to diversify. Don't do it. Simplicity is also important, but if your portfolio has taken months or years to build, then you have more to lose, and that's when diversification comes in. Do your own risk assessment. I can make a video on how to risk assess. If you're interested, let me know. But if you've been at this a while, you know who you are. This next part is for you. The goal isn't to predict the crisis. The goal is to make sure that no single event, whether it's a geographical tension, an app outage, a currency move, or a market correction, can wipe you out or lock you out. You know the saying, don't put all your eggs in one basket. And honestly, with your money, don't put all your eggs in one app. So here's your actual to-do list. Simple, practical, doable this weekend. 1. Ignore the noise. Seriously, mute your WhatsApp groups and delete Instagram. Follow official sources only. 2. Check your emergency fund. You should have 3 to 6 months of expenses in a liquid, accessible account. Not invested, not locked, accessible account. 3. Check your platform exposure. Are you over-reliant on one app, one bank, one broker? Fix that. 4. Review your asset allocation. Again, not to change it in a panic, just to make sure it still reflects your actual risk tolerance and goals. Uncertainty is uncomfortable, but it's also temporary. What you build right now, the habits, the diversification, the calm, that's permanent. So for goodness sake, don't panic, don't sell, and definitely don't send money to anyone on WhatsApp. Watch my portfolio breakdown video next, not because I'm telling you to copy me, but because seeing a real actual allocation might help you think about how to build your own. It's in the description and in the pinned comment down below. Don't forget to like and subscribe. Yalla Arbab, now go boss your money.